Good afternoon. Today was an interesting day. Let me know in the comments what you guys thought of today, what your ideas were, what trades you took. I'd be interested in knowing. And some of the ideas that I had, they're on the chart here. Talk about the lines that I have on the chart. First, this blue line, that's the previous all-time high from, let me pull it up. So that's what it is. So that blue line, that's the all-time high from over here. And you'll notice we've kind of stalled right around that all-time high. And we're kind of waiting for the moving average to catch up to it. And probably then we'll go somewhere else. This blue line, that's just the 6,300 level. And then the white line, I'll draw this white line on my chart. This is marking the open. And I'll draw that on if the open is acting as an important price. So when do I know to do that? Well, when the market reacts to it often throughout the day, or when the market goes a certain direction and then reverses back through the open and then goes about that same direction again, and then you start to see it continuing to react to the open price. So it touched it here, then broke through and pulled back before heading higher. So when I start to see that kind of price action, especially if there's multiple early touches of it, so if we had more touches early, then I would have drawn it on earlier. So I didn't actually draw it on until over here, until I started seeing it be important again. So that's what that white line is. And anytime the open is acting as an important level, then I want to be aware of that, and it can help out later in the day. First trade, market gapped up pretty strongly, and the first two bars it was bullish. So not only did we have a bullish gap up, but we had bullish continuation. And a common thing you'll see me do is mark these. When you get consecutive bars like this, decent sized bars, small tail on top or no tail, that often can lead to more buying. So after we gapped up above the all-time high and had these bars like this, there was a chance that the day could end up being a bull trend day for the whole day. So it'd be worth trying to take some sort of swing trade here. When you get this type of price action on the open, this setup where it's two bars, so here's 2 times your risk. You'd probably want to at least go for that, maybe more. You can swing trade. Another way to do it is you can just treat this as a scalp as well. So normally these arrows I mark for scalp trades. And if I'm going to do something different, then I say it. But basically you just look at the chart and say, yeah, there were the scalp trades for today. But so buying here, you could swing trade, or you could scalp, try to get 5 points out of it. So you could buy above the bar, put your stop below that bar, and then try to get 5 points. So I think that's reasonable for a scalp. I'll put the swing trade on again. I think it's reasonable for a swing trade as well. Because a lot of times when you get those 2 consecutive bars, the day will end up being a bull trend for the whole day. Something like this. Now this was a holiday day, so it ended early. But 2 bull bars, 3 bull bars, went above the third, and then trended up pretty strongly, even past the lunchtime hours. So got a reversal down from that. What were the signs we might be getting a reversal? Well, I think the signs are through here, and that's what's so important in price action, and that's really what trading is learning what causes this move down. People might think, well, it was news, maybe there was some tariff announcement. Could be, not necessarily. And in fact, this looks like pretty clean price action. So we had 4 bars up. And what were we talking about? We were talking about buying above this bar. Other traders will buy above the 3rd bar or the 4th bar, and they'll continue to buy, betting that we're going to have that bull trend. Then when you start to have bear bars, that's disappointment. And the traders start to think, well, this might be an early reversal, and we actually end up down today. So at some point, they decide to exit their longs because it's no longer going up. It's not doing what they were wanting to. So imagine they had bought the close of this bar 4. So this 4th bar, they buy the close. Market pulls back, and they're hoping it can at least get back to their first entry so they can exit, but it doesn't. So they're disappointed. Tries to go up again. It doesn't again, and it's actually even lower this time. So we had a tail here, and then another tail that's lower. So the bulls are finding it harder to even get back to this first close they had. And after 2 attempts up like that, some of them end up giving up. They say, this might be a reversal down, and I don't want to be on the wrong side of it. So instead of holding my stop way down here, I'm just going to go ahead and exit below one of these bear bars. So with that prefaced, I will mark that. So if you see that and that's your idea, then that's a good short there. That's not something I did because I felt like today might end up being more bullish. So I wasn't willing to take a short. But just reading the price action, the pure price action, that looks like a good short there. And what's the evidence that this is what the traders were doing? Look at these big bear bars and then the follow through. Traders exited here. The bulls were buying up here, then they decided to exit those longs here. And then you got two big bear bars. So yes, this could have been news, but really this looks like pretty clear price action to me. Market got below the moving average. So this is a pretty strong bear leg here. Okay, you can draw like your channel lines in. So here's leg one, probably get a little bit more down, so pull back. And then here's a little bit more down. We're looking at there being a double bottom here. Market pulls back, tries to go lower again here. So call this a triple bottom. And because of that, that's why I have this marked as a buy. Buying, trying to get back to the open. After we went above, then went below about equal distance. Reasonable to thinking we're probably going to go back to the open. And you have almost 5 points to get back to the open. So you should be able to have enough room to get your 5 points if the market heads higher there. In this case, that didn't work. And then you end up going sideways. What formed from this was a triangle. So anytime you have these tight ranges in here, try to look for if it's forming a triangle. So a good rule of thumb, if the market's going sideways like this, these small bars that are overlapping, just stay out of it until you see a breakout, which you get here, and the pullback that touches the apex of the triangle right here. And then from there, you can begin to try to look for trades again. So 3 bull bars up. So let's say someone buys here, they buy above this third bar. What's good for them? The 2 things that's good, 3 things good for them. They've had 3 bull bars up. The last one closing on its high, that's good. It's above the moving average, that's good. And there's room to the open. So if you buy above this, you have at least 5 points to be able to get out by the time it gets back to that resistance level. What's going against it, if you buy here, this is only the first breakout of the triangle. So what happens with most triangles is that first breakout fails and it pulls back. So it's best to not be buying above that bull bar. If the context was different, then these candlesticks by themselves look like a good buy, but I don't like trying to buy that first breakout of the triangle. If you are, you need to remember your odds aren't all that high, so you need to go for a swing trade. So it'd be something like buying here and going for maybe 7 or 8 or probably 10 points at a minimum. So I'd probably be trying to get up here if I was going to buy here. So that's something to keep in mind. If you feel like your probability is lower, then you need to adjust it to be a swing trade instead of a scalp. Okay, so breakout of the triangle, pulls back, touches it. Now, what's different here compared to here is that here we're above the moving average. The market, you see all these little attempts that come back, but they stay above the moving average. So the market, the moving average is controlling it now. The price can't get below it, and that's nice to see when you're trying to look for buys. So I have this marked. This is the first. Here we have 2 consecutive bull bars. So bull bar and then a stronger bull bar closing near its high. So reasonable to buy there. You're risking about 5.5 points, so not too much. And then you're able to get your, let's see, what would that be? So if you buy here, you probably wouldn't be able to get your 5 points. It didn't quite go enough. But by the time it gets up here, you would have moved your stop up to break even. And so you'd still get a point out of it or a tick. Or if you decided to hold, you could have gotten your 5 points on the second leg up. So, either way, it worked out buying above there. And for the same reason, I have this marked as a buy. 2 consecutive bull bars, this one closing above its midpoint, above the moving average. And also look at what we have. Coming full circle, we're talking about the opening price again. The market is now above the opening price, and it double bottomed at the opening price here. So I like to try to be taking a swing trade and be buying above that. So when you see these, when you see the market break out of something and then test it, then it's okay to try to look for buys once the market starts to head back up again. If you're not happy with the follow through, you could exit below a bear bar like this. That's a pretty strong bear bar, so it'd be okay to manage it early and be getting out of that. But the general idea is, try to follow the moving average. Look for these support and resistance levels. Like this is an easy one, the open. So now once we get above it, looking for buys is the better thing to do. So that's all I have for today. I posted a live trade yesterday, so if you want to check that out, I'll have the video linked here for you to click on and watch that. So thank you guys for watching, and we'll see you in the next video.